Hello students, welcome back. This is Dr. Mercado speaking. We are continuing with chapter 10, which deals with accounting for sales and cash receipts. This is the first lecture for this week. Dealing over, let me see, what are we going to be working? This particular lecture is over journalizing sales returns and allowances. We're also going to be posting to our general ledgers, and we're going to be creating subsidiary ledgers. So there's a lot of information included in this problem. Okay. Just a reminder, by now you should have already read chapter 10 because we started working on chapter 10 last week. We should have already completed the reading portion of it. I'm just going to dive into the problem solving. Just make sure that if you're not understanding something, you please communicate with me. I don't want you falling behind. There's no incorrect answer or any wrong question you might have. Just go ahead and shoot me a message with whatever issues you might be having, so you can be able to progress and complete your assignments. Everything that's on your homework, it's given to you for a reason, because it's important, because I need for you to be able to master it and understand it. More than likely you're going to be seeing a lot of this information on your tests. Okay, so let me jump over to exercise 10.7. Okay, I hope all of you are doing good this week. Okay, exercise 10.7 deals with journalizing sales returns and allowances. So it says, enter the following transactions starting on page 16 of your general journal. I've already created the journal right here, and I've already put the page number up here for you. Okay, so it says, enter the transactions on your journal and post them to the appropriate general ledgers and accounts receivable ledger accounts. Use account numbers as shown in the chapter. Beginning balances in accounts receivable is $4,200. Beginning balances on selected customer accounts are Abramowitz $850, Gruder $428, and Perez $1,018. We are giving 3 transactions to analyze, okay, and record. So I've got my journal. They're asking us to journalize in our journal. Then they're asking us to post whatever we have on our journal to our respective ledgers. There's going to be 2 accounts affected, my accounts receivable and my sales returns and allowances, and I've already set those up along with their beginning balances. This information was given to me in the problem. It says here that my beginning balance for accounts receivable is $4,200. Sales returns and allowances didn't have a beginning balance. And then they're asking us to create subsidiary ledgers, and they've provided us the beginning balance for each of the customers. So there's 3 things that we need to get done. Okay, so let's tackle the first one, which is journalizing the transactions. Okay, so the first thing we have is John Abramowitz. It's a weird name, but let's just call him John. John returned merchandise previously purchased on account for sale number 329, $73. So John is making a return for something that he purchased on account, which means he hasn't paid for it yet. Okay, so he's returning it, and he's going to get credit for it. Okay, this is happening on June the 1st. Okay, so what are we doing here? Well, John is making a return. So we're going to go ahead and we're going to debit my sales returns and allowances account. Okay, and the return is for $73. Okay, now because he hadn't paid for them yet, whenever we recorded this sale, we recorded it to our accounts receivable. Because he's returning the merchandise, we're going to give him credit to the accounts receivable. So accounts receivable gets credited. And then we have to put the name of the customer. J. Abramowitz. Okay, let me just make this a little bit bigger. Okay, so every time you have a return, you're going to debit sales returns and allowances depending on how they paid. If they paid you cash, then you have to give them back your money, right? You're going to give them cash. In this case, they had paid on account, so we're going to give a credit to their accounts receivable. That way when they pay us for the difference. That those items that were returned would be credited to their account. Okay, and then we're going to put here returned merchandise on sale number 329. Okay, now on June the 6th, what happened on June the 6th? Marie Perez returned merchandise previously purchased on account as well, sale number 321, and she returned $44. So every time you have a return, you will always debit sales returns and allowances. And you're always going to credit your accounts receivable. Okay, that does not change. Okay, but just make sure that you do put the correct name of the person here. So here is M. Perez. Okay, and the return for Perez is $44. Okay, we debit sales returns and allowances. We credit the accounts receivable. Okay, on the 8th, LB Gruder returned merchandise previously purchased on account as well. Sale number 299 for $24. Let me put a description here. We returned merchandise. That way we keep record. Sale number 321. On the 8th, we also have sales returns and allowances. Okay. And we're going to have our accounts receivable. And this is for LB Gruder. Okay. And the return for Gruder was $24. Okay. So those are the returned transactions that we have. Let's put a description here. We returned merchandise of sale number 299. Okay. So we have 3 returns. Customers purchased something and then they didn't need it or whatever the case may be. They returned the product. They had purchased this product on account. So whenever they purchase something on account, we need to give them back credit on the accounts receivable. Okay. So that is the first requirement. The second requirement is to transfer the information. And let me just insert a column here. I forgot to put my post reference column right there. Okay. So now the second part is to transfer the information over from my journal to my ledgers. Okay, I have 2 ledgers because I have 2 accounts: sales returns and allowances and accounts receivable. So let's focus on my accounts receivable first. Okay, the question informed us that our beginning balance for my accounts receivable is $4,200 right there. Okay, so that is my beginning balance. $4,200. Now I'm going to go and I'm going to locate everything that's my accounts receivable. Okay, I have 3 entries to my receivable. Okay, there we go. So I'm going to copy those 3 entries and they're all credits to my ledger over here. Okay, and we do it by order. So June the 1st is let me see. June the 1st happened here on your accounts receivable for Ambrowitz. And let me see. Okay, so we're going to enter. The first thing we're going to enter is on our post reference. We have to bring in our page number. Okay, so it's going to be our journal 60. Where are we getting this entry from? We're getting it from our journal page number 60. Okay, so we're getting this transaction from the 60. My transaction is a credit. Okay, so I have a credit of $73. Okay, now if you notice your accounts receivable is an asset account, the normal balance is a debit. Because these are returns, we're giving back credit to our customer. That's a credit. So because it's a credit, we are going to be subtracting. Okay, so if it's a debit, we add. If it's a credit, we subtract. Okay, those are if it's an asset account. Okay, so because we have a credit, I'm going to be subtracting. So that's going to be 4,200 minus 73. That gives me a balance of 4,127. Okay. Next, we're going to do June the 6th, and we have a transaction for $44. Okay. This is Journal 60, and this is $44. Okay. And let's get our calculator out, and then it'll be 4,127, and it's another credit, so I'm going to subtract minus 44. That gives me 4,083. Okay. Now, I forgot to tell you something. Another step. After you post your transaction to your from your journal to your ledger, you have to go back into your ledger and do what? You have to enter the post reference column. Where did you post this to? Well, I posted it to ledger 122. So we have to go back to our journal and post 122 to the transactions that have been transferred already. Okay. Third transaction is June the 8th for $24. This is we obtained this from journal page 60. The amount is $24. And because it's another credit, we are going to subtract. Okay, and that gives me $4,059. Okay, so that is my general ledger for accounts receivable. Okay, I've entered all three transactions for accounts receivable. We're going to do the same thing now for sales returns and allowances. We've got three transactions there. Okay, we're going to do the same thing. Make sure that we go back and we enter our post-reference information. Okay, this tells me that I've posted these three transactions on General Ledger 122. Okay. Okay, so now let's start off with my sales returns and allowances. That one did not have a beginning balance. So we're just going to start off with the first transaction, which is June the 1st. And we have a debit of $73. Okay. This is coming from journal page 60. And we have a debit of $73. Okay. So I've got $73 debit balance right there. Okay. Then we have another sales returns and allowance on the 6th for $44. Let me see. Okay, right here, June the 6th. This is journal 60, and then that's $44. And because they're both debits, we're going to add them together. 73 plus 44, that gives me 117. Okay. And then we have the last transaction, which is our sales returns and allowance on the 8th for $24. Okay. So it's June the 8th, journal 60, and that is $24. So we're going to add another debit of 117 plus 24. That gives me 141. Okay, 141. Okay. So now I've transferred three transactions from my journal. I'm going to go back to my journal and I'm going to enter my account number, which is 401.1. Okay. 401.1 is my general ledger for the sales returns and allowances. Okay. 401.1. This tells me that I've posted all of my sales returns and allowance transactions to general ledger 401.1 and my transactions to my accounts receivable ledger 122. Okay, so on your general journal, on your post reference column, you enter your general ledger number. On your general ledger column, on your general ledger, for your post reference, you're going to enter the journal page number. Okay, and these are your ending balances for each of the accounts. Okay, so that is requirement 2. Okay. The last and final requirement is to do the subsidiary ledgers for each customer. Okay, so we were provided with beginning balances. It says here that we have the customers have balances of $850 for Amber Mowitz, $428 for Gruder, and $1,018 for Perez. Okay, so those amounts have been entered. The beginning balance for $850, $428, and $1,018. Okay. So now what we're going to do is we're going to transfer the information that pertains to each specific customer. So here we have Amber Mowitz, okay? And we have a credit of $73. I'm going to copy that over to my subsidiary ledger on June the 1st, okay? So on June the 1st, we have on Journal 60, page 60, we had a credit of $73, okay? So Amber Mowitz used to owe me $850. We just gave them a credit of $73. So now Amber Mowitz owes me $777. This subsidiary ledgers will keep track of how much each customer owes you. So it's the balance per customer, okay? So now they started owing me $850. They returned $73. So now they only owe me $777. Now we're going to go and we're going to find Gruder. Gruder returned $24 on the 8th. Okay. So Gruder on the 8th returned $24. Okay. This is coming from Journal 60. And it's also a credit. So it's on the credit column. And we're going to go ahead and we're going to deduct So Gruder used to owe me $428. Gruder returned $24. That means that Gruder now owes me $404. Okay, and then we have last Maria Perez, Marie Perez. Okay, Marie Perez. Let's see where we have Perez. Perez returned $44 of goods on the 6th. Okay, so this is happening on June the 6th, and this is Journal 60, and she returned $44. Okay, and then that is going to be the 1018 minus the $44. That gives me $974. Okay, so now I know that my ending balance for Amber Mowitz is $777. That's how much the balance he owes me. Gruder owes me $404, and Marie Perez owes me $974. Now, when we're posting to our subsidiary ledgers, what usually happens is we have to go back to our general journal, and we have to identify that we've posted it both to the general ledger as well as the subsidiary ledger. So when we post into the subsidiary ledger, we go in there and we insert a check mark. So we put the general ledger number. It tells me I've posted it to my general ledger 122 as well as my subsidiary ledger. So that is how it should look for your accounts receivable accounts. Okay, that tells me I've posted it to two places. I've posted it to the ledger, and the little check mark shows I've posted it to the subsidiary ledger. And we only post to the subsidiary ledgers the accounts receivable balances. Okay, that's the only thing that is affected by it. So that is how we record transactions in a journal. We transfer the information from the journal over to your respective ledgers. We have two general ledger accounts. The name of the accounts and the account numbers are listed, and then we calculate the ending balance. And then once we're done with that, we update our subsidiary ledgers for our accounts receivable with the information provided. Okay, so that is the first lecture. I am going to have an additional lecture for this week, so make sure that you listen to it. I think I'm going to be covering 2 additional problems. It's just for help or additional resource in case you are struggling with the material. I can provide a little bit more of guidance. Okay, so that is basically it. Have an awesome week, and until next time.